Attention all Tesla enthusiasts and investors. The much-awaited Q4 production and delivery data of Tesla is out, and the results are generating a buzz in the financial world. Despite facing criticism from several analysts for not meeting the consensus of financial groups, the head of research at ARK Investment Management, Brett Winston, has a different take on the situation. According to him, Tesla's Q4 numbers are not a miss, but rather groundbreaking. With higher production rates expected in the upcoming quarters, the stock price could skyrocket to 400 in a few short weeks. But before we get to know Brett Winston and his thoughts about the company, I'd like to see you hit that like and subscribe button first. Now fasten your seatbelts and let's delve into the world of Tesla's Q4 data and predictions for the future. Brett Winston is the director of research at ARK Invest, a New York-based investment management firm that focuses on disruptive innovation. He is responsible for leading the firm's research efforts, specifically in the areas of automation, energy, and mobility. Winston is often cited in financial news and media outlets as an expert on these topics, and he's provided commentary on a range of issues related to innovation and finance. And because of his reputation in the finance world, most people would agree with what he has to say. And the common people should be able to at least hear his thoughts. That way, they can have a different perspective and make a sound investment. Tesla recently revealed its Q4 production and delivery data, which has been criticized by numerous analysts for not agreeing with the consensus of financial groups like Wall Street. It appears that Brett Winston is correct in asserting that the automaker's Q4 deliveries were not a miss, as Tesla's VA increased by €40, while the market was expecting a decrease of roughly 8%. By 2027, he estimates around 60 million electric vehicles will have been sold, with Tesla accounting for a substantial percentage of this total. In the next 5 years, he believes electric vehicle sales will account for the majority of the auto market. Tesla's stock price drop last year was attributed in part to Elon Musk's controversial actions. Elon Musk's controversial actions have been cited as one of the reasons for Tesla's stock price drop in 2021. One notable incident occurred in May 2021 when Musk tweeted that Tesla would no longer accept Bitcoin as payment due to environmental concerns, causing the value of the cryptocurrency to drop and leading to criticism for the cryptocurrency community. Musk's comments and actions have also drawn scrutiny from regulators, including the Securities and Exchange Commission, due to his use of social media to comment on Tesla's stock price and other financial matters. But the company also had and has concerns about the markets for its vehicles. Some investors have hypothesized that Tesla has a demand problem, especially in the crucial Chinese market, as a result of the recent price cut for its EVs in this and other EV markets. Reports have been completely updated on Tesla's development in the final 3 months of 2022. Tesla stated that its annual vehicle deliveries increased by 40% year over year to 1.31 million, and that its annual vehicle production increased by 47% year over year to 1.37 million. However, a FactSet consensus of analyst estimates indicated that Wall Street was expecting Tesla to report deliveries of approximately 427,000 for the fourth quarter. However, the head of the research at ARK Investment Management, Brett Winston, has stated that rather than a miss, Tesla's numbers are groundbreaking, and he added that higher production rates in the next quarters could spur the stock price to go as high as $400 this year. But Brett Winston thinks production, not demand, will determine whether or not Tesla reaches its growth target. Even though Tesla's demand may be falling because EV buyers haven't yet concluded that their decision to buy is due to tax credits on some of their cars, this will eventually pass taking into account the numerous price cuts that Tesla is doing in most of its markets. So rather than waiting for another incentive or for Tesla's cars to qualify, it may be cheaper to buy the car due to the price reduction. Along with the Model 3, the automaker is unveiling a new vehicle chassis that will be around 50% cheaper. In October 2018, Musk disclosed that the next generation platform would cost only half as much as the current Model 3 and Model Y, so even if the project has been delayed and may not arrive for the next couple of years, there's still a lot of anticipation for the new platform. While the EV's delivery date is still a mystery, Musk has promised that production levels will considerably exceed those of the Model 3 and Y. Production enhancements like the GigaPress, which molds massive chassis pieces all at once, are to thank for this. The new car platform were set to be unveiled on Tesla's Investor Day on March 1st. Tesla's Investor Day, which lasted for several hours on March 1st, left many shareholders and supporters feeling unsatisfied and caused a decline in Tesla's stock price on Thursday. However, despite this, analysts remained optimistic overall. In a Friday morning autos update, Deutsche Bank analysts stated that they were very disappointed with the lack of specifics provided by Tesla regarding its next-gen platform. They noted that the company did not provide information on the launch timing, vehicle segments and price points, and financial implications. Nevertheless, the analysts also acknowledged that Tesla showcased impressive progress and presented plans for specific technological and manufacturing improvements, which they believe will help maintain the company's long-term volume and margin growth. During the event, Tesla did not discuss the affordable electric car that was first previewed at a 2020 Battery Day event. Additionally, there was no update on when the Cybertruck would begin deliveries, no details on the revamped Roadster, and no progress update on the company's new Semi for heavy-duty trucking. Musk did not provide any information about how Tesla intends to collaborate with his other business ventures. Additionally, as of Friday morning, the company's investor relations page still did not include a Master Plan 3 document. At the end of the day, regardless of Tesla's updates on quarterly calls or investor days, Brett Winton believes that if Tesla can successfully construct this low-cost EV, then it would once again set the standard in the EV market, echoing the sentiments of the Tesla Ball, which had previously discussed how innovation could provide a competitive advantage for businesses. It was also emphasized that there were parallels between current innovations and investments in emerging economies. Speaking of emerging economies, at Investor Day, executives at Tesla held off announcing the company's biggest news of the week until a few hours into the event, when Elon Musk confirmed during a QA session that Tesla would be opening its next major factory outside of Monterrey, Mexico. However, no new details were provided at the time. The following day, Mexican officials disclosed more information about the project, including that Tesla is expected to invest $5 billion in the vehicle assembly plant in the near term and $10 billion over the long term, and the factory will employ between 5,000 and 10,000 workers. The factory will be Tesla's largest in the world and will be built on about 4,200 acres of land. During the Investor Day event, Musk mentioned that he believes some Mexican officials were in attendance, but did not mention their names or titles. Thomas noted that if the new factory is important to Mexico's economic future and to Tesla's business, it was not respectful for Musk to treat these officials in an offhand manner, and he could have welcomed them by name and acknowledged their partnership more respectfully. Winton thinks that the company has a lot going for it in the next years, which may lead to an increased demand and a higher stock price. If Tesla can perfect their self-driving technology, he says it will be a game changer for the company. On January 25, 2023, after the stock market closes, Tesla revealed its financial results for the December quarter and year. Tesla recently announced its Q4 earnings for 2022, revealing that the company generated revenue of $24.32 billion and earnings per share of $1.19. The automotive revenue for the quarter amounted to $21.3 billion, which also included $324 million in deferred revenue from its driver assistance systems. However, the company's automotive gross margins of 25.9% were the lowest in the last 5 quarters, which may cause some concerns for investors. One of the greatest markets in the world, Tesla is steadily headed toward an even higher increase in cars in transit at the quarter's end due to geographically diversified production, so needless to say, advancements are on the horizon. Even with the recent hiccups, Tesla is close to being able to produce over 1 million units per year at its Shanghai factory, and the firm as a whole may be able to achieve even greater production rates as a result of the ramp up throughout its plants across the world. To what extent do you agree with this evaluation? Please share your thoughts in the space provided below. Make sure to subscribe and enable alerts. For now, thank you for watching and promise to see you in future videos.